Good morning, Tobias. How's Scandinavia, I should say? Constant, how you doing? Ron? I think both Rons are here again. G'day, Lee. How's Te-a-Mutu, Lee? You still in TA or you moved to Palmerston North? Okay, let's get started. Yesterday, quick recap. We were talking about the toolbox, right? And what goes into it. And you'll remember that I was mentioning that the most important things that need to go into it are sort of completely personal, and you're way better off looking at things that you're passionate about versus something that, you know, someone says is a winning system or a winning combination of indicators or those sorts of things. So we sort of just had an open discussion. Remember, I'm here to sort of just talk about building strategies in general and try and sort of shortcut you to doing that faster versus preach a specific set of things that might work and you should do it this way because it works. That I don't believe is true. I believe that everything will work. You just need to pick something you're passionate about and become expert at it, and you'll be fine. Remember, with a trading system, you should have something that trades the trend, cuts losers quickly, lets winners run, and you can work out psychological rules and all those sorts of things. So yesterday we sort of dawned on the toolbox and just spoke about the sort of things that can go in it. We had some examples and those sorts of things. Well, we're right in the engine room of a trading system here, aren't we? This is what really makes it tick, is we have a set of tools, we do some analysis, we do some trade planning, and we execute and manage. It's really what is the nuts and bolts of what's going to make you money. So today, sort of leading on from the toolbox, I think we need to take ideas from what you might use in your toolbox and apply it to how you might perform analysis. If you're going to go and sit down in front of your charts every day, all by yourself, you're going to have to sit down and try and interpret the charts and look to make some trades, right? You're not here, some of you might be at that point where you're sort of, hands up, anyone in the room who sits there and puts their hands up, put your hands up, anyone in this room now who sits in front of their charts and sort of just glazes over and sort of the day ends and they turn off their charts and go, well, that was good. Sort of sat there and looked at charts. I don't really know how to interpret them or anything, but, things happened and I didn't make it, I lost some money and now, try it all again tomorrow. Anyone in that position? There you go. So Colin's in that position every day. Okay, so what we need to do is work out how we can take some tools that you may be passionate about and then apply them to doing some analysis. Okay? Analysis, guys, I cannot talk about this enough. You're going to struggle if you are not good in putting time into analysis. Vishal, g'day. You're going to need to be competent at analysis. Remember, guys, if you're going to be a trader, a lot of people cannot make it to the next step. A lot of people get jobs as analysts and working for funds and stuff. They don't go any further. They can't sort of take analysis this step further. So we're trying to do analysis and turn it into trade planning and execute and manage stuff and be professional about it day in, day out and make a career out of it, right? Sitting in our home offices and things like that. So if you cannot be good at analysis, your trade planning will struggle and it just leads on. Your execution will struggle. And when all those things struggle, psychology and your rules become a problem. And this sort of engine room in here that we have all breaks down and trading accounts sort of head in this direction versus the up direction. Make sense? Sound about right? It's exactly what's happening to most of you, and I'm only saying that because I've been down the road. You can't do analysis correctly, the trade plan can't be good. Garbage in, garbage out, essentially. Okay, so let's have a little chat about some things around analysis. Okay, the most important component of your engine room, I believe, is to be able to analyze what the markets are telling you. Sitting down every day, bang, what's happening? Where the trades coming from today? And I know a lot of people, as Colin was saying, sit down and just sort of look at charts, sort of stare at charts. They're not sort of really making any sense maybe some of the time. Well, we've got to try and work out and get our minds thinking to get them to make sense, right? And if they don't make sense, we just move on to something that does. So, most important component of the engine room, okay? And as I said, poor analysis will equal poor trade planning, and therefore execution of a trade, and of course, over-leveraged. Making speculative decisions. Good answers in the room, right? Now, why is all this happening? Well, if you have not got confidence in your analysis, you probably pulled the trigger on a trade somewhere where maybe you shouldn't have. George, take profit quickly, yes, but you're also going to be taking full losses, and that's the problem. You can go and take a quick 4 pips, 5 pips, yes, but then suddenly, you might get a number of those in a row, but then bang, you'll get a 20 pip loss. So you're back to the start. Right? So, I think a good indicator of poor analysis is micromanagement of your trades, because you've basically got no confidence in what you're looking at, and when you're making a trade, you're already thinking about getting out of it as soon as humanly possible. As soon as humanly possible, you're already thinking about getting out of it. Oh my God, turning against me. This is not what I wanted to see. I'm getting out. Yeah, no proper trade plan. Well, you might have had a trade plan, but you're already worried about the analysis side of it because you've probably got in at a wrong spot. And of course, poor analysis leads to poor trade plan and the poor execution. Wim, I'm Rob, I'm not David. David's later. Geez, everyone's calling me David today, even in my own class. You know what happens in my bootcamp class if someone calls me David? People from my class who are in this room will tell you. It's okay. David and I are like brothers from different mothers. We're good buddies, so it's okay. We speak highly of each other. He's a damn fine trader, that young man. You're alright, one. So you were asking, this is being recorded, yes. Okay? So if you want to just relax, sit back and listen, and then if you want to watch it again later, you're all good. Okay? Same father. I don't know, I'll ask my mother. Okay, so I think this is a good thing to realize, guys. If you are sitting there today and you are sweating bullets when you've pulled the trigger on a trade, think about, go back and go, what was my plan like? What was my analysis like? You're probably a little bit needing some work on the analysis front. Okay? So you got to maybe realize that, you know what, maybe I just need to step back from this pulling the trigger business right now, and maybe I just need to go and review analysis a little bit more, and make sure just spend some time looking at analysis. Remember, you're not going to get rich quickly in this game. It's a gradual process. So, as I've been saying on the opening day, when I joined bootcamp, and this is one of the reasons why I was able to become a full-time trader in a year, is I got used to analysis and charts and price action and what they should do and all those sorts of things. I got used to that before I even considered making a trade. I got used to that sort of deal before making a trade. I just sat back and looked at charts and worked out, okay, that looks like support, That's the next level of resistance. So that, look, I'm actually pretty good at picking direction. I went from, of course I demoed. Oh yeah. Demoed for a long time, right? But even before I had a demo account, I just sat back in Bootcamp and just watched and took notes and learned about analysis. And then when I was confused or I had a question, I'd ask questions. What's that fib? What's the reverse fib? And suddenly worked out things. And then sort of the transfer into making trade plans was actually quite easy. Right? So we'll talk about these things, George. Okay, we'll take a look at this sort of thing as the session goes on here. Oh, thanks, Joshy. Thank you. So, this is going to become an absolute shock to you. Okay? But analysis should only be performed in higher time frames. Your planning and execution are performed in the lower time frames. Okay, so when I say that, I've just got a Kiwi dollar up here, 4 charts you can see. Okay, I've got a sort of what I call a fractal sort of scan. Well, your analysis, guys, is more done down here, and this is a 4-hour and daily chart. That's where all the analysis gets done. Okay, that's where I live every day. I was showing my class my personal trading platform the other day, and I showed them how I only had one 15-minute chart in my entire platform, and I've got, I don't know what, 8 screens. Oh no, I've got like 30-something charts up. G'day IR, how you doing? Ms. Pips. Okay, but everything for me, all my analysis, where are we going, are we trending, are we up, are we down, what's going on, is all done in the higher time frames. Okay? It's only when I get back to what I think could be an area of longer term support, i.e. potentially this Kiwi is back somewhere there now in this 4-hour 21 sort of 55 area. Good angle of separation on the EMAs here. If I think the trend is changing in this little area here in terms of my analysis is done, then I transfer the analysis over into a trade plan where I will set it up in like a shorter term 15-minute time frame. And why is that? It's because that's where I'm going to wait for my little price action confirmation. This is my little system anyway, to actually get me to the long side. I'm going to wait for price to show me that there's people buying in this longer term area of support. And if it all clicks together and price falls into the trap that I want, I'm going to long it. So that's what I mean by analysis on the longer time frames. Take it to areas of longer term support or resistance. Then the shorter term time frames are where you build your trade plans and execute. Okay, you with me? Probably many of you live in charts like this. These sort of 15-minute charts. Live in them. Correct? Many of you will. You do, because I've seen it. And it's popular. A 15-minute chart's very popular with a trader. If I'm using a 15-minute chart, usually in class, in terms of my analysis, I'll always be zoomed out. My class will, I'll be with my class and I'll be like, just showing it in a different sort of angle. I'll be like, fib of the 4-hour rise, and I'm showing it in the context of a 15-minute chart. Well, see, the time frames you're going to use are completely up to your strategies. That's the link. Okay, that's the link back into our toolbox, right? Is the strategy the toolbox, the tools that you like are in your toolbox. So if you scalp your way around, you might have a 3-minute chart and a 1-minute chart and a 5-minute chart and things like that. Okay, it's up to what you are wanting to get out of the trading. My lowest time frame personally is 15 minutes, and I only use it to wait for price confirmation to enter a trade. When I started trading, I started looking in these time frames, just living in the 15. Like I had a 1-minute chart here, okay, and then I had a 15-minute chart over here, and then there was like a sort of an hourly chart over here, and that's sort of where I lived, and I just couldn't get things to work. And so this is after just a couple of weeks. I just said I need a different angle here. So I said, you know what? I need to go and do analysis in longer term time frames, get them back to longer term levels of support and resistance, and then make the trades from there. Because I'm a believer that the longer the term the time frame, the more there's a chance that direction's going to be what's in control. Yeah, Lee, it is. See, I have an office in my house that's external to the house, and quite often I need to trade and sort of look after kids or hear out for kids. So I'll just trade on a laptop in my kitchen. But you just maybe not trade as many pairs. You just might pick a couple of USD pairs, a yen pair, and just make it work on one screen. No big deal. I mean, I started trading, guys, live. I started trading on a laptop. And then once I earned some money trading, I bought myself my trading computer. I earned it. You can make money on a laptop, no doubt about it. I do it all the time because I take, sometimes trade when I'm on, back in New Zealand on holiday or something because it's good trading hours. And so I can make money on a laptop, no big deal. I mean, if you're waiting for a 4-hour pullback, change of trend on a 15-minute chart, I mean, those things take a while. You don't need to be sort of scanning the universe. 10. Boy, go at 10 right now on my live platform. Okay, so screens, sorry. I've got 8 24-inch screens and 2 30-inch screens. No, I don't miss pips. I sort of hang around and wait. Okay. So, so when you're sitting down every day, this is what you'll hear in boot camp, especially with David and myself, is every day when you sit down, if your strategy is done on a 1-minute chart, my goodness. I mean, you're at least going to have to use something like an hourly or 15-minute chart to plan off, right? It's the same deal, just practically different, where if you're executing on a 1-minute chart, you might plan off a 15-minute and an hourly for the longer term plays and then execute with confirmation on a 1-minute chart. That's on one computer, Boyke. I'm teaching on a different computer here. I have 2 computers in this office. So you'll hear this in class. I'm a huge fan of just looking for the easy trade. My goal is to sort of if I can make 50 pips a day, I'm totally happy. If I can consistently make 50 pips a day on average, I'm not going to have a worry in the world, right? As you build up your trading account and add lot size and stuff, things like that can become quite significant. And so if I can just sort of consistently stick to something like that, I'm fine. And I think it's quite important, I should add this right now, when you're steady, boring, monotonous, the same thing day after day, consistency is what makes a successful trader. Okay? Well, it doesn't matter what lot size I trade or anything. It's all about how much money you've got in your risk and how much money you want to make and all that sort of stuff, right? But, I do pretty well, make a comfortable living and stuff. But my longer term, like down the road, I've got big goals. Big goals. So, if you're wondering about my screens, there's some question about the type of VGA. I have 12 video cards, I think, in my computer. So I've got a video card per screen of the latest NVIDIA video cards. So I've gone the whole hog on this thing. So what I'm saying here is don't try and be like a rock star trader. Like, man, I'm just, if you're trying to be a rock star in this business, it's going to crash and burn eventually. Okay? You're going to crash and burn eventually. Boring consistency is what's key. And that's what makes those market wizards and those market wizards books so successful. They found something, they became expert at it, they liked it, and they just have been doing it for 25 years, and now they're worth like $800 million. Okay? So, what I'm getting at here is, when you're doing your analysis, don't make the common novice mistake of just checking the first one or two pairs and then deciding that you're going to sit there and try and manufacture something. Go through all the pairs you might trade, like you might have 6 pairs, you might have 8 pairs, 10 pairs, 12 pairs. Go to your 4-hour charts, your daily charts, and do some analysis and try and look for the easy trade. Most days, at some stage, there's going to be a pair or a couple of pairs that is going to be it might take a bit of experience, but they're going to be a lot easier to trade. Something that's like trending, like every time frame is up or down, is way easier to trade than something that's where the daily's up, the 4 hours down, the hourly's up, the 15 minutes down, everything's sort of fibbing all over itself. It's way easier to take the thing that's trending and say, pull back long me, pull back short me. Way easier. So I will do that. I will look for those sorts of trades. And if they exist, they're going to be my favorite. Okay? Always look for the easy trades. You'll be surprised as a novice how you'll look at the first pair and go, I think I can manufacture something out of that, and you'll stick there. I'm watching about seriously, I'm watching like probably 8 pairs, to be honest. I'll always watch like the USD pairs. If I sit down and look at, I'll always start with like the pound and the euro and the Swissy and stuff and the Aussie and stuff. And if they're moving and they look good, I won't even consider a yen. I won't even bother looking at the yens. If the pound is moving, or if a USD, I should say, is moving, I'm not going anywhere else. I'm just going to say, okay, so which one of these bad boys is the one I'm going to jump on? Okay, but I will go like seriously across. I've got 12 pairs up on my trading platform right now, and I will, each one of them will get a good look at every day. Okay, well maybe Sam will take a look at that as an example. Okay, we'll take a look. I'll show you what's easy, okay? Okay, so we're going to take a look at some live examples in a sec. So look for the setups and the setups that suit your strategies, right? Wait for the trades to come to you. Don't go looking for something that doesn't exist. And if nothing exists in the setup that you like, you just need to move on and walk away and come back later or do something else. In GFT, I'm a big fan of setting alarms and things. If I do not see something that I like, or if I'm sitting down by myself trading New York or something and there is nothing that I like, I'll just walk off and go and do something else. Go do some exercise, play with the kids. I don't know, do some, the old honey-do list that the wife's got for me. Okay, you've got to learn to walk away. Trade when it falls into your lap, not trade when it's in someone else's. And that all links back to the toolbox and the tools you use and how you're going to do your analysis as an individual, right? Okay, so if I'm sitting down today doing some analysis, I will look at a pair like the pound, and I will instantly just go to something like a 4-hour chart. Okay, and I will look at this and say, okay, so what are you doing, pound? And try and gauge my bias, the direction I think it's going to head in, which is naturally going to lead into where I would like to buy it, whether I want to buy it or sell it, correct? By looking at this 4-hour pound chart here, can anyone tell me what their bias would be? Short? Okay. So I would look at that and think, there's a number of ways you can do this, right? I would think short based on price action, which would be lower highs, consistently lower highs, and series of lower lows. Okay. Now we've had this what I call a move fib through here. So we've basically swung our way down, swung, and then we've had this pullback to say a 618 of that entire fall. Let me just highlight that for you. And then our 4-hour downtrend has sort of resurrected itself and we've continued in that direction. Sort of looks fairly bearish, doesn't it? But Scove made a point, but you wouldn't short there, and Scove's 100% correct. I would be shorting from probably somewhere, I would like to short somewhere back maybe up in here. So that's where my trade plan would be. Back here, short based on my bias, which is short. Okay. Well, this is the thing, is now that I've decided where I would like to short it from, I'll go into my shorter term time frame, like my 15-minute time frame, and that last little move that you saw on the 4-hour, this one, down through here. Just waiting for the charts to refresh, but it's got a bit of a delay here. So it was highlighted on a 4-hour chart, right? Well, that's going to be this drawn on a 15-minute chart. That's going to be this entire drop. So I'd probably throw something like a Fibonacci retracement, something that I would use up on this. And so here's the zone where I'd probably like to short this thing from. So if price got back up in there, I would then be waiting for a change of trend on a 15-minute chart, something to short from, and my stop would just be above the higher highs. Okay. So very simply, based on something like this pound setup, I've formed a bias, doing some analysis, and then looking to maybe short it. Now, sort of the now, right? That's maybe for today. Because what we're trying to do today, if you're going to sit down and make some pips today, is just fill in. So you'll see these boxes you see here are days. There's not many candles in a day. 4-hour candles, there's only 6 of them, right? So we're only trying to fill a box in here, so maybe we're looking to fill in something like that. Okay, we're not going to maybe do much. So as part of your analysis as well, what you need to do is think of the bigger picture and maybe where we're going longer term. So you might zoom out on something like this pound and then say to yourself, okay, so what if that trade plan that you're making does not work and we do something like this today? We just start swinging up and we basically change trends. So on my 15-minute chart, basically we go in a little uptrend through here, and instead of stopping and rolling over and giving me my short, it just keeps going. Well, obviously I'm not going to short, right? I just look at sort of, George asked us this question with numbers of bars. I don't really look numbers of bars. I look at sort of swings and I try to read what price is doing, if you like. But I just assume that some stage I'm going to get a pullback. Okay? So you can always plan in chart. No, I don't do oscillators at all. But if you want to, that's cool. Okay, if we got back up there, I'd take a 15-minute change of trend short scob, yes. But you should always think about the other picture as well. So you should zoom out on this 4-hour chart. And this 4-hour chart, and I think Lee mentioned it, and a few people did about support, is potential still. Up. Okay, and probably while we have not broken down through here, we are still probably, technically, that is still potential. Okay, and that's something you could think about as part of your analysis is, okay, well, I like it short through here, but if that fails, maybe we'll do something like this, where price will come up today, you will take the short, it'll come to a fib of the rise, and then do that. What's going to be the plan then? And then you can start thinking, well, whilst we are doing that, I'll do nothing until such time we maybe break this swing, and then maybe that will give me enough confidence that we're now back in an uptrend because that's now been broken. This area down here will be support at a higher low compared to previous, so pull back and might look at something like that. So just ideas of how maybe you could do some analysis. Now, this is an example of a pair that just right now seems to be a little maybe choppy. Correct? It's sort of stepping its way around and taking big steps. Would you agree, just looking at this very zoomed out chart? I mean, it's tradable if you know what you're doing, but it can be difficult. Now, basically, if we think about Fibonacci, you can fib this in every way possible. Pull back, fib, short. Pull back, fib, short. Broken swing, pull back, fib, long. It's sort of fibbing itself in every single way possible. Well, I'm not talking trade planning or anything, Mr. X, but we'll talk about that in the next session and build on that sort of stuff. But once you've found out your analysis where you're going to long it from, you need your 15-minute change of trend or whatever, and then you need to build, that's going to be sort of the heart of your trade plan, and then from there you work out, obviously, risk reward, stop loss, and a take profit area. All in advance as part of a trade plan. Okay, so that can be actually, this can be sort of these sorts of conditions where you can literally, fib, long, fib this entire rise, long. They are good if you understand fractals and things like that. I do them as part of in my tool set. I have some visual stuff, like I might line something like this up. I'll draw in green. Like if I'm looking at my personal chart, I might join the bottoms of these sorts of things up and say, you know, support, support, support. What happens if it gets back to support type thing? You know, I'll do some basic stuff. I like sort of more horizontal role reversal areas. This sort of thing is part of my analysis where sort of what becomes, you know, what support sort of can be resistance. So, you know, in yellow I've got support, support, support. There's some resistance over here. That sort of deal. Yes, I do, Van. I'm probably, without a doubt, one of the world's biggest pivot traders. I could talk pivots for weeks. Theories, up the yin-yang, I could talk pivots. We can talk pivots in the next few weeks. Okay, so that's an example of using of quite hard, maybe, you know, analysis that can be quite difficult, right? But there's times when if we just maybe bring up an Aussie daily chart or something, there are times when, you know what, let's do the Swissy. That's what I was talking about in class today. There are times when this is not the case. There are times when actually other things are in control and things don't really fib like you were just seeing on that chart. They're doing this. Now, if you sit down and you're sitting down every day and doing your trading and you see a pair that looks like that, or you see something like that pound, which is like, I'm a little bit down, now I'm a little bit up, oh, now I'm a little bit down, oh, I'm a little bit up, oh, I'm a little bit down. I mean, that's what it was. It was just a whole lot of big sideways waves. Or you see something like this Swissy, which is just like down, 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 down. Trend, like it's actually doing something we want, like trending. What would you be focusing on as a trader? What should you focus on? Right. But most of you won't. That's the hard thing. Most of you will stop at like a euro or a pound and not even move on. Exactly, Colin. Most of you would take the cable over something like the Swissy that's actually trending. Now, why would I say that the Swissy would be better? Probably, Lance, most of you would try and long the Swissy, yes. That's a good point. But why? Right, clarity of the direction. What else? Think about trading. Think about what traders are doing. They're always going to short at the path of like least resistance, right? Yeah, there's some fundamentals based in there and stuff. So people are just shorting it. So, you know, every opportunity when you've got something that's trending down like this, every opportunity to short is going to be taken. Every opportunity to short it will be taken. And this is the classic example. Yeah. And so I was talking to my class today about it. I used to say in class, when we were way over here, people in my class would say, you know, I talk to my class openly about, you know, people will say, oh, what are you going to trade today? And we would have done all our analysis, and the first thing I'll say is, based on the analysis we've done today, I'll be trading the Swissy. Next day, what are you trading today? Based on our analysis, I'll be trading the Swissy. And me and the Swissy, probably my most traded pair in the last year. No idea about the Japan safe haven. I'm not really a fundamentalist. Well, Boyke, the Swissy sort of taught me that it can go as far as it wants, because I went through periods where I thought that's a bottom. No, just pull back, kept going. All these are bottoms, and they sort of just kept on going. So I sort of learnt to just sell it at the resistance levels. Right. And now it's up at what, 1800? It can just keep going. Just keep going and going and going, right? So it's way easier to be lining up these sorts of trade plans in this direction when everything is just trending beautifully. See, if you've got a daily chart that's down, and you've got, see this angle of separation on the 21 and the 55 here? That's the red and the blue line. So the 21 EMA, of course, is the red line, and the blue line is the 55. And price has pretty much been pulling back to that zone, down, pulling back to that zone, pulling back to that zone, down. Okay. You can plot it on any time frame, Vishal. It's depending on completely how you want to define it. So a fib on a daily, it's a swing, right? You do it on swings or moves. So you just take a daily swing. Oh, there's a daily swing. There's my fib. But if you want it on like a complete move, then you're sort of saying, okay, well that might be a move or something like that. Cliff, very often I'll see something that, sometimes there is nothing of stellar quality, right? But there's always something that's way better than something else. But usually, like, there is something. Right now, I think haven't got anything awesome right now, but I think we're setting some things up in the next few weeks. Now, especially now we've got money coming back in the market, what I'd love to see is something fundamental to start coming in the market and push it, everything like the USD in a certain direction. So that, for example, something like this euro dollar, which is, here's the daily euro, right? Talk to me about what you see here. Daily euro. Good, bad, ugly, what do you think? Sideways, flat, ugly. Right, so you shouldn't even be bothering with it, right? You should just walk off and say, dude, that is just dog's breakfast. Move next pair. What's an Aussie look like? What's a Swissy look like? Because this is just, you're going to get so shaken up unless you know what you're doing, really know what you're doing. Yes, Robert. See, money's going to start coming back in the market because all the big hedge fund managers and stuff are coming back from their holidays, from the Hamptons and stuff. And so the funds are starting up again, and the money's going to start coming back in the market. And so for the next 2 months, I'm expecting some pretty good money. Some moves. So maybe something like, see, what we need is something now to push these in a certain direction, like fundamentally. Remember on the first day I was mentioning, fundamentally. By the way, Ivan, let me know when you want me to stop. The doctor's not in the room right now, so I can keep going, right? These charts are built fundamentally, right? So there's nothing fundamentally really been going on. What we need is we need NFP on Friday or something to go, dude. And we break out of all this stuff. And the daily goes, and then we're like, yes, we have some clear direction. It looks like these are sort of where we're going. And so we'll just look for pullbacks, and we'll just look to continue that stuff. And we'll just look to ride the trend. And that's when your analysis, on this pair kicks in and says, oh, okay, now we're trading. They'll do a mixture, Lee. They'll have technical guys, analysts, and fundamentalists. And this is the most liquid pair in the world, right? And look at it. It's sort of like in this wedge. So, okay, if the doctor's not here, I can maybe go for the next sort of 10 minutes or so. So that's when it's time to go and trade the euro, when it does something. Now, we might actually see something like this, where we're sort of sideways in this little wedge here, and suddenly we sort of pull back and fall. Well, that's fine as well. We'll just take the pull back and we'll just look to short that thing at resistance, right? I'm not here tomorrow, guys. I'm only here Tuesday, Wednesday, Thursdays, okay? Okay, Ivan, thanks. Not really scope, not now. I used to, but I will watch stuff for a long time before trading it, maybe. So summer holidays will start in America, or Northern Hemisphere, right? Like, we're talking start of mid-June, start of July, all the way into like start of September. So there's like a 6 to 8 week period there of rubbish. Oh, look. July, June here. Sort of got trapped, didn't it? Sort of first class ticket to nowhere. So I was explaining the other day, you need to adjust your trading strategy, your system around holiday periods. I'm really happy with I'm quite happy with my performance during this summer. I've actually sort of struggled the last couple of summers to where it really make money. It wasn't losing money, but getting a lot of like break-even trades. And it took me a few years to work out, man, it's the summer thing. Don't go swing trading, position trading. Those things don't exist. Just if you can go and make a 40, 30, 40, 50 pip trade, take that money and run, dude. And give yourself a high five and move on, because it's summertime. Things don't go anywhere. And that's exactly what you're seeing here. Check out the pound as well. On that 4 hour, it's sort of very sideways. Now we need something fundamental to give us some new direction, and then we can jump on a new trend. What do you mean? I didn't put any files up, Lee. Did I have a few camera resets or something? No? Oh, okay, yeah. No, I didn't put any. So, when you're doing analysis, guys, I mean, each one of you are probably going to be doing analysis a little bit differently. Okay? Some people might use price action and things, like myself. See, these things are what interest Rob. These higher highs, series of higher highs and higher lows. Swinging, thank you. Just riding that little trend up through there. Okay? That's the sort of thing that I like to trade until it doesn't want to be traded anymore. In fact, let me draw this is what I look for on longer term charts, is my own personal analysis, right? Is something that's trending, like this. And when that trend runs out, I wait for the move of that rise. And then I try and get it to continue. So, what's going on here? Well, once we're trending, I like to buy at areas of support on pullbacks. Yes. Now, what happens in this sort of instance I've drawn up here is price is swinging, goes up. Price just crashes through for some reason, Lee. Probably, on a 4 hour chart, guys, to get this sort of setup where price is up, suddenly breaks the swing, and suddenly we swing down a level. That could be some sort of news. Like, I don't know, not massive, it could be pretty big news, like that could be an NFP type thing, where this could be the euro, it could be swinging up for weeks on end, and then suddenly, boom, crash, down. That could be generated by something like NFP, and that just basically takes us back to support in a longer time frame, and then suddenly we resurrect our trend back to the upside. Okay, so I will then start trading the trend back to the upside again once it resurrects itself. And I'll always enter Lucas, on a 15-minute change of trend. Exactly, that is a move fib here. That is a move fib. Another way of looking at, if you want to try and get your head around that, is if that was a 4-hour chart in green swinging, that blue move fib would be like a daily swing. You see this here? We'll use the Kiwi. Someone's mentioning it right now as an example. See, this is forming on the Kiwi right now, right? Is where we've been swinging our way up. Swinging to swinging. So people like me just buy at support, right? Buying. So my analysis tells me that we're long, broken through these highs. So buying at support, that's very easy to see. You guys can see that? So if I get in every one of these little yellow areas, if I saw a 15-minute change of trend that suited my setup, I would execute a trade. But every pullback on these swings, I'd be looking to build trade plans. Right? So suddenly, we've got this pattern where it swung up and boom, we've broken through this last swing. So suddenly our 4-hour is down. I don't add to. I just sell. I'll get in and sell, get in and sell, get in and sell. I'm not a creative. Remember, I'm not a rock star. I'm a conservative, humble little trader in California trying to make 50 pips a day. But if I can do it consistently day after day after day after day, I'm going to be in good shape. Possibly because now we've got this move fib situation. This is possible, right? We're going to pull back here and we're going to come down another level, and we're going to complete. See, this is an ugly daily swing in here in blue. But now we're going to go for maybe another daily swing. So we might come down to something like 84, sort of 50% fib, and then look to do something like that. Percentage of what? Scope? It could do. I mean, you see this is what I'll do with my analysis, right? Is I'm big on fibs. So now that the 4-hour trend is over, I'm move fibbing this thing, and sort of all close enough in that 50% fib area is that, or even in the 618 is that 84 area. I'd like to see price come there. Oh, I'm fairly I have a pretty high track rate scope. I'm probably above average in terms of, because I'm quite conservative, and if I'm waiting for changes of trend to form, I'm only taking a couple of trades a day. I'm not a huge trader at all. Yeah. So, see, I believe now that we could do this. Another reason why I believe we could be doing this. No, Lee, I'm actually pretty big on taking a trade and going and doing something else. Like, I took a Swissy short in class today, and it's up. What am I up? 30 odd pips, right? But after I took the trade, I've been inside eating dinner and putting kids to bed and watching TV and stuff, and I've come out to do this webinar, and came out to see what it's doing. I could not sit and watch my trades. I'd die. And after this webinar, I'll go inside and watch some more TV and maybe come back later. So the reason why I think we can get short here, guys, is this. If I zoom out, we're actually potentially, my analysis is showing me we're potentially at a fib of this drop, right? 618 of the fall. And our 4-hour is sort of rolling over here. Change of trend on the 4-hour. So there's probably a safe trade from here down to somewhere like here. That's what my analysis tells me. Using things out of my toolbox like Fibonacci, fractal nature of the market, and price action. So I would quite confidently today build trade plans to short the Kiwi at resistance, 15-minute change of trend down to somewhere like here, and then once I've probably made my move fib in this direction, I'll probably start to look to do the long side again and see what happens. You don't use the pivots here. You probably see the pivots here are going to be used in this sort of context, right? This is how I would use pivots in this sort of situation. Is let's say we get a pullback into London, and New York gives us later on a nice little area to change of trend to short from on a 15-minute chart. My take profit on that short for the day might be extreme daily pivots like M1, S2, something like that. That would be used as my maybe take profit area, especially if it's in that area. I mean, does anyone have an S2 or M1 for the Kiwi dollar today? Pivots wise? Daily pivots? Now you might also be looking at pivots in terms of your analysis. There you go. I aren't even looking at it. How would I know that? Right there. So, what's the bet that area, this yellow box here, let me redraw. But what's the bet this yellow box is also, because of it's a fib of that fall, let me just show you, to zoom out again. I'm not even looking at pivots, but is that some sort of weekly extreme pivot up there or something for the Kiwi? Monthly central, weekly extreme, something along those lines? Because if it is, there you go. It's resistance, right? So it's another reason why things might start rolling over here. So you might have permission to build trade plans short to a fib of that rise before looking to longing it. So that's how you can build all your, taking tools from your toolbox. You might use pivots as your analysis. Weekly extremes, dude. Doesn't have to go any longer than that, and you're at this big fib of the drop. Well, if we get confirmation, we can start shorting that thing. Well, the 4-hour chart is actually changing trend. Beautiful. I mean, it was swinging up. Now it's sort of made a high, broken through some previous lows. Okay, it's at pivot extremes to the upside, so that's a good area of resistance. And I might build in my take profit being a short getting out in New York and an extreme daily pivot. So that's how you can build your pivots into it. Okay, just some ideas. I think we need to wrap it up there, guys. I use them in, I use it actually automation and a few other bits and pieces, the pivots. They can tell you a lot. I mean, a lot of people trade them. I have some different strategies we can cover. Have yourselves a good weekend, guys. Don't forget NFP if you're going to that with Wayne McDonald. I think he wants me to speak there, actually. London's open in a couple of hours. Otherwise, I'll see you next Tuesday, guys. Okay? Have a good weekend, and we'll see you then. Cheers.